Hi, hello and namaskar friends. We are doing the analysis for 19th September and 20th September together. So let us start analysis for 19th September Nifty chart. So for that we have to mark important levels for previous day, which was 18th September. So here on 18th September, if you see, nothing much happened in the market. It was little bit of sideways and then it fell down and then again little it closed on the opening level only. So this is PDH and this is PDL. Since it has taken support and the candle is inside this virgin CPR now, there is no need to extend the virgin CPR. So this virgin CPR will end here only. Now today on 19th September, if you see, the CPR is very narrow. It is if the CPR is narrow like this, okay, there are two possibilities. It will be trending day or it will be zigzag day. See, it's only possibilities. It can happen sideways or it can go in any direction. It can have reversal also. This is just in the possibilities. Now if you observe today, the first candle opened above the previous day range. It has opened above the PDH and the CPR is also narrow, and this is the perfect setup for it is a perfect setup for opening drive pattern. It means in this pattern what happens is, the criteria is the first candle should be green, it should break the PDH or it should open above the PDH, and the CPR should be kind of not very wide, so it can be average CPR or narrow CPR. So all the criterias are fulfilling. Even the 20 EMA is not too far. The only thing is, in this trade I see not good risk reward, but still you can enter the trade. If you enter here on the first candle, then your stop loss will be below the first candle low. Now in this case, if you see, it has not much space to move ahead. Whenever you take a trade on the same direction, there should not be immediate resistance or pivot or any kind of hurdle from where the market can reverse. So in this case, there are two small factors which are not in favor of our high probability trade setup. The first is there is immediately some resistance on top, and second is the risk is big. Like if you enter here, stop loss here, twice the stop loss is big target, and in between there is a pivot also. So still, if you have taken the trade, you can keep the stop loss and your stop loss will be hit by this candle. Okay, so once this trade is done, then we don't have any trade here. The first candle high is broken, but this wicks was still there. This wicks is broken, but then again from here to here, this 20 EMA is also high, and yeah, this is a setup. But today, as I told you, the first entry only failed, so you cannot enter here again. Like if you have entered here, you cannot enter one more lot here, so you just have to wait for your trade to complete. So that's it. Then the market started reversing from this level. If you enter this candle, your stop loss should be below this pivot or below the candle, then also your stop loss will hit. So obviously first trade stop loss is hitting, then the second trade will be, this is the first candle and it is proper green candle, and when the candle will come to the first candle low and form a green candle here, this is your entry. But you see, this exactly it has ended below this 20 EMA. So 20 EMA kind of resistance here, but this is a bullish pin bar, and it is called as green candle reversal pattern. Means first green candle, the bottom it has hit, so from this level market went till this level. So whenever this same setup happens again, the candle comes to the base of the first candle, and from there it forms a bullish candle. You have to enter here, so you have to enter this point, and then below that it is a stop loss. But this is little bit like it is ending on the 20 EMA. Still, if you ignore 20 EMA and you enter, your stop loss should be here. So second stop loss also will be hit by this candle. So now back to back two stop losses are hit, so you should be out of the trade. There is no trade. Whenever your two stop losses are hit for a day, you should be out. But just for the patterns, if you go ahead, then I see no pattern here. This candle has broken the low of the first candle. This is a proper bullish candle, and this candle has broken the low. But in this case, if you see, it's not a proper bearish candle. Otherwise this can be treated as like this is a green candle breakout trade. The first day's low and the first candle low and the day's range is broken by this candle, but it is not a proper bearish candle because it has a big wicks down. Still, if you enter here, your stop loss should be above the candle, and twice the stop loss is target. So here you can achieve. But as I told you, when your back to back two stop losses are hit, you should not enter the third trade. That's the rule of the setup. If you are not taking trade here and only one stop loss is, you can enter the second trade. Target only 2 trades per day. There won't be more than 2 trades. Hardly, sometimes there will be 3 trades, but it will not happen that every candle you will find a trade. Maximum 2 trades. That's the mantra of being consistent and saving your capital. So here when you see your target is hit and then there is no trade, then it is below this. It's not a trending day to take this 20 EMA retracement trade, so there is no trade after this. Okay, so there are days wherein you will make losses. So this one today is one of those days. So let us continue for the analysis of 20th September, which is today. Okay, as we do, we mark the highs and lows. I think this low is here, so okay, we mark the highs and low, which is called as PDH and PDL. This is PDL, previous day low, and previous day high. There is no important level as such. Actually this is the important level. If you see this below, this is called as turning point, because this from this level market is broken, and again when these points came here, market could not break this level, and again it fell down. So this is a turning point, but this turning point is falling within the range of the CPR today. So that level is not important. Whatever falls within the CPR range is not important. Now today market opened with a bearish candle. First candle, there is no trade on the first candle because it is not green. If it would have been green candle, then it can be a CPR breakout trade or PPT trade, but immediately there is support, so there is no short entry here. So in this setup, what we can see is we can see CPR reversal trade. If any from the red candle it fell down. This candle became a green candle, first green candle, but you cannot enter here because it is not a properly bullish candle. I told you, whenever we enter, you should have a proper bullish or bearish candle. So to take the bullish trade here, this is not the candle. Okay, the next candle, 945 candle, this is your entry candle. You should enter on the top, and your stop loss should be day's low, below this candle low, or below the CPR at least. This is your stop loss. Double the stop loss is your target. So I think back to back this candle has given you target. You should be out here, or day's high, or this pivot, it should be your target, or PDH. Wherever there is a resistance, that should be your target. So first trade is hit, second, then after that Is there any other trade? I don't see until this PDH is broken, and PDH we have to see. Yeah, PDH is kind of supply zone, because from this point market went below the day's low and closed at like it is a supply zone. From here market could not cross this level. So once this supply zone is broken by this candle, there is a long trade. So you have to enter this point, take the stop loss below the PDH, and double this stop loss is your target. So this pivot is target, and the target is hit by this candle, and that's why I say whenever your target is hit, you should be out of the trade. Then what happens, that is not in your control. It could have gone up, gone down, and see how fast and how swift it became. It won't give any chance. Your both the stop losses will hit and you will be out of the trade with big losses if you don't control your trading psychology and setup. So I think both the trades hit. Then from this point it reversed. Why it is reversed, nobody knows, because see, when now I think the market is reaching to non-charted territory, means market has never gone to this point earlier. So market, and nobody knows how there will be reactions in the market, because earlier we had levels like 25,000, 25,500, till that market went and then reversed. But from such points we don't know from where the sell off will start. So it is always better to save your capital, put proper stop loss and get out. So it became zigzag and very violent at the end, but it closed at the highest point. So that is how there is no trade after this second trade. And even you're taking second two trades and both your targets are hit, that time also you should get out, because rarely you will find third setup. My experience, and even if you see the professional trader psychology and all, they also advise, if you are an intraday trader, first thing is trade less. The lesser you trade, more you earn. That is the simple. The more you trade, you will lose your capital. So trade less, maximum 2 trades a day, and follow your risk reward. I think that's it. Bye bye, take care.